Alright, we have a request how to make AI video, talking video for 15 minutes long straight with this tool. So if you want to follow along, I'll put a link down below. So after you sign in, you want to go to avatar video right here.
Hello. Welcome to a space where professionalism meets opportunity.
Now you can choose any avatar that they have. These are pre-made avatar, or you can use your own avatar. I have plenty of tutorial already how to make this avatar. So let me choose one. Okay, so I want to use this one.
Welcome to the future of UGC video creation with Jogg AI. Just type your script to get started.
Now I'm gonna go to script. Now 15 minutes long. We're gonna max out all the script right here. 15,000 characters, guys. Right. 15,000 characters about investing for beginners. So I'm gonna use this as an example. As you can see, this is super long, so I'm gonna click on apply, or if you want to edit, you can click on edit, or you can enter some requirement here. I'm gonna click on apply, and then I will delete some section. Okay, we don't actually quite maxed out these 10,000 characters. We still have another 5,000, but I don't know what kind of words to put anymore. We're gonna just try 10,000 characters here. I'm gonna change the voiceover.
By repeating what students say, teachers can demonstrate.
Hey, everybody.
Hi. Every puzzle solved is like hey, are you looking for a fresh and engaging voice for your podcast or social media?
Okay, I'm gonna use this, and we're gonna generate this video. Again, if you want a longer, make sure you just fill this out. I'm gonna click on render. Now you can see the queue is 60 minutes long. Gotta wait. So usually it's around 2 to 5 minutes. Since we have a very long text, it's gonna be taking 60 minutes. So I will come back later and we're gonna check the end result together. Alright guys, the video is done generating. As you can see, with 10,000 characters, we can generate up to 11 minutes long. If you max it out into 15,000 characters, I think it is over 15 minutes long, guys. So it is around 10 to 15 minutes long, of course. Now I'm gonna show you the videos itself without cutting, without editing. Again, if there is some hiccup, you can edit the video. It's very easy. So here's the end result.
Hey everyone, welcome to our channel. If you've ever wondered how to start investing, what it really means, and how you can grow your money over time, even if you don't have a lot to begin with, this video is for you. Today we're breaking down the basics of investing for beginners. Whether you're in your teens, just starting your career, or simply new to the world of finance, you'll walk away with practical knowledge and clear steps to get started. So grab a notebook, settle in, and let's dive into the world of investing. Let's start with the fundamentals. What exactly is investing? At its core, investing is putting your money into something, like stocks, bonds, real estate, or even a business, with the expectation that it will grow over time. Instead of letting your cash sit in a savings account earning minimal interest, investing gives your money the chance to work for you. But investing isn't magic. There are risks involved, and there's no guarantee you'll always make a profit. The key is understanding those risks, knowing your options, and making informed decisions. Think of investing as planting seeds. With patience, care, and the right conditions, those seeds can grow into something much bigger. So why should you invest at all? Here are a few compelling reasons. Beat inflation. Over time, the cost of goods and services tends to rise. If your money isn't growing, it's actually losing value due to inflation. 2. Build wealth. Investing is one of the most effective ways to build wealth and achieve long-term financial goals like buying a home, funding education, or retiring comfortably. 3. Achieve financial independence. The earlier you start, the more time your money has to grow, thanks to the power of compounding. 4. Reach specific goals. Whether it's a dream vacation, a new car, or starting your own business, investing can help you reach these milestones faster. Now, let's talk about the main types of investments you'll encounter as a beginner. 1. Stocks. When you buy a stock, you're purchasing a small piece of ownership in a company. If the company does well, your investment can grow in value. Stocks can be volatile, prices can go up and down quickly, But historically, the stock market has provided strong long-term returns. 2. Bonds. Bonds are essentially loans you give to governments or companies. In return, they pay you interest over a set period. Bonds are generally considered safer than stocks, but they usually offer lower returns. 3. Mutual funds. A mutual fund pools money from many investors to buy a diversified mix of stocks, bonds, or other assets. It's managed by professionals and is a great way for beginners to get exposure to a variety of investments without having to pick individual stocks. 4. Exchange-traded funds, ETFs. ETFs are similar to mutual funds, but trade like stocks on an exchange. They often have lower fees and can be a cost-effective way to diversify your portfolio. 5. Real estate. Investing in property, whether it's your own home or rental properties, can provide both income and potential appreciation. Real estate can require more money upfront and more ongoing management. 6. Others. There are other investment options too, like commodities, gold, oil, cryptocurrencies, and even collectibles. But as a beginner, it's wise to focus on the basics first. So, how do you actually make money from investing? 1. Capital gains. This is when you sell an investment for more than you paid for it. For example, if you buy a stock at $10 and sell it at $15, you've made a $5 gain. 2. Dividends. Some companies share their profits with shareholders in the form of dividends, regular cash payments. 3. Interest. With bonds, you earn interest payments over time. 4. Rental income. If you invest in real estate, you can earn money by renting out your property. Remember, not all investments pay dividends or interest, and prices can go down as well as up. That's why diversification, spreading your money across different types of investments, is so important. Every investment involves some risk. The higher the potential reward, the higher the risk. Here's what you need to know. 1. Risk tolerance. This is your ability to handle losses in your investments. Are you comfortable seeing your portfolio drop in value, or do you prefer stability? Knowing your risk tolerance helps guide your investment choices. 2. Time horizon. How long can you leave your money invested? If you're saving for retirement in 30 years, you can afford to take more risks than if you need the money in 3 years. 3. Diversification. Don't put all your eggs in one basket. By spreading your investments across different assets, you reduce the impact of any single loss. Chapter 4. Volatility. Some investments, like stocks, can fluctuate a lot in the short term. Others, like bonds, are more stable. The key takeaway? There's no such thing as a no-risk investment, but you can manage risk through smart choices and diversification. One of the most powerful concepts in investing is compounding. This is when your investment earns returns, not just on your original money, but also on the returns you've already earned. Over time, this can lead to exponential growth. Let's say you invest $1,000 at a 7% annual return. After 1 year, you'll have $1,070. In the second year, you earn not just on your original $1,000, but on the $1,070. Over decades, this snowball effect can turn small investments into significant wealth. The earlier you start, the more time compounding has to work its magic. Even small, regular contributions can add up over time. Ready to get started? Here's a simple step-by-step guide. Step 1. Set your goals. What are you investing for? Retirement, a house, travel. Knowing your goals will help determine your strategy. Step 2. Understand your finances before you invest. Make sure you have an emergency fund, 3 to 6 months worth of expenses in a safe, accessible account. Pay off high-interest debt, like credit cards, since the interest you pay usually outweighs investment returns. Step 3. Learn the basics. Take time to learn about different investment types, how markets work, and basic terms like diversification, risk, and asset allocation. Step 4. Choose an account. You'll need an account to start investing. Common options include brokerage accounts. These let you buy and sell stocks, ETFs, and more. Retirement accounts, like IRAs or 401ks, which offer tax advantages for long-term investing. Step 5. Pick your investments. As a beginner, consider starting with broad-based index funds or ETFs. These track the performance of a whole market, like the S&P 500, giving you instant diversification. Step 6. Decide how much to invest. Start with what you can afford. Even small amounts add up over time. Many platforms let you start with as little as $10 or $20. Step 7. Automate your investments. Set up automatic transfers to your investment account each month. This takes the emotion out of investing and ensures you stay consistent. Step 8. Monitor and adjust. Check in on your investments periodically, maybe once or twice a year. Rebalance if needed, but avoid making changes based on short-term market swings. Common mistakes to avoid. Even experienced investors make mistakes. Here are some common pitfalls to watch out for. 1. Trying to time the market. It's nearly impossible to predict short-term market movements. Focus on long-term growth instead. 2. Putting all your money in one investment. Diversification is key. Don't bet everything on a single stock or asset. 3. Ignoring fees. High fees can eat into your returns over time. Look for low-cost investment options. 4. Reacting emotionally. Markets go up and down. Don't panic and sell when prices drop. Stay focused on your long-term plan. 5. Not having a plan. Investing without clear goals or a strategy can lead to poor decisions. Understanding investment accounts. Let's talk a bit more about investment accounts. 1. Taxable brokerage accounts. These are flexible and let you buy almost any type of investment. You'll pay taxes on dividends, interest, and capital gains. 2. Retirement accounts. 401k, offered by many employers, often with matching contributions. Contributions are pre-tax and investments grow tax-deferred. IRA, individual retirement account. Available to anyone with earned income. Traditional IRAs offer tax-deferred growth. Roth IRAs let your money grow tax-free, and qualified withdrawals in retirement are also tax-free. 3. Other accounts. 529 plans for education savings. Health savings accounts, HSAs, for medical expenses. Each account type has its own rules and tax benefits. Choose the ones that align with your goals. Basic investing strategies. Here are a few tried and true strategies for beginners. 1. Dollar cost averaging. Invest a fixed amount regularly, regardless of market conditions. This reduces the impact of volatility and avoids trying to time the market. 2. Buy and hold. Pick quality investments and hold on to them for the long term, rather than trading frequently. 3. Index investing. Invest in funds that track a broad market index, like the S&P 500. This provides diversification and typically lower fees. 4. Asset allocation. Decide what percentage of your portfolio to put in stocks, bonds, and other assets based on your goals and risk tolerance. 5. Rebalancing. Over time, some investments may grow faster than others. Rebalancing means adjusting your portfolio back to your target allocation. Resources for learning more. Investing is a journey, and the more you learn, the better your decisions will be. Here are some great resources. Books. The Intelligent Investor by Benjamin Graham, A Random Walk Down Wall Street by Burton Malkiel, or The Little Book of Common Sense Investing by John Bogle. Websites. Investopedia, Morningstar, and the SEC's Investor. Govdanya podcasts and YouTube channels dedicated to personal finance and investing. Stay curious, keep learning, and don't be afraid to ask questions. Final tips and encouragement. To wrap up, here are a few final tips. Start early. The best time to plant a tree was 20 years ago. The second best time is now. Be patient. Investing is a marathon, not a sprint. Don't be discouraged by setbacks. Everyone makes mistakes. What matters is that you learn from them and keep going. Stay consistent. Small, regular investments can have a big impact over time. Remember, you don't need to be rich to start investing. You just need the willingness to learn and the discipline to stick with it. Your future self will thank you. Thanks so much for watching. If you found this video helpful, please give it a thumbs up and subscribe for more content on personal finance and investing. If you have any questions or want to share your own experiences, drop a comment below. We love hearing from you. Until next time, happy investing.
It's pretty cool, right? Obviously, you want some transitions, you want to add some overlays. Again, guys, if you want to try Jogg AI, I'll put a link down below. It is awesome that you can make like 15 minutes long form videos using this tool, and having an AI avatars, AI voice talking for you is amazing deals, especially if you can get the yearly plan and get 50% off, and you can also get an extra 10% discount using the coupon code in the description down below. If you like this video, guys, thank you for watching. In the meantime, you can also watch my other videos right here.